Welcome back to Business Week here on Arise News. I'm joined now by Ifeanyi Ubah, Chief Investment Officer, VNL Capital Asset Management, to review some of our top stories in more detail. Good morning and welcome to the show. Great to have you on the show. So I want us to start with the global stories first. So traders have dropped the odds of a rate cut. Quarter percentage. We're expecting 25 basis points. That's now dropped to about 50% from over 90% in terms of the odds. What is going on here? Is it just reading the fact that the Fed doesn't yet know what to make of the economic data coming out of the US?
So thank you for having me. So when it comes to understanding the interest rate posture of the United States, it's sometimes has a little bit of quantitative and qualitative attitude. We understand that the posture of the United States president is to bring rates down. But there are some hesitations because we see that the spending has continued and it's going to have inflationary pressures. But on the other hand, we see the jobs numbers not really doing well. So we're seeing pressure, we're seeing stocks that might be overvalued. So the economy is actually not as strong as possible, but the rate cut is actually inevitable because we have seen bond yields actually spike up. And this is because, we see global players like China selling out. And if they continue to reduce their treasury yields holding and US is still financing debt above what they are spending on defense, it's going to actually have a huge blowback on the economy. So rates actually have to come down to continue this mega power.
So they have to come down, but is this really about, it's a dramatic decrease in the odds. So is this really about the Fed maintaining optionality or caving into market pressure?
So everything changed when the Fed president came out and said it's not a done deal.
Okay.
And the market participants said,
and they read a lot into that.
Yes, definitely, because he still has a couple of months before there's a change of tenure.
Of course.
He could hold the rates as long as possible. And if you look at the divide between the Fed committee meetings, people are leaning into uncertainty rather than actually having a full-blown rate cut. And the truth about it is that we look at macros, but one thing we should remember is that prior to Donald Trump entering the election, the Fed had an unnecessary rate cut that did not affect the macros. So Donald Trump is like, oh, if you could cut it then, why can't you cut it now?
Okay.
So there's a whole lot of rhetoric around the rate cut, but it's about who has more power. Remember, there's still a Supreme Court ruling to check whether Donald Trump can remove a federal appointee, right? And if that happens, it means the president has more control over what happens in the Fed. So it's a whole colossal of options, but the truth about it is that it's not going to be a good time to be a trader.
Sure.
Because if there's a rate cut, we see sometimes market still goes down. Government shuts down, market shuts. Government opens, market still shuts.
Yeah.
It's actually not a good time because there's too much volatility.
Indeed. And what does a higher for longer scenario mean for us here in a frontier market like Nigeria? Higher for longer rates in the US? Okay,
so I don't think it can be higher for longer. It could just be temporary.
Okay.
But what we should look at is the spread. For emerging markets, we still see that there is a premium. Like, look at how Nigeria came into the Eurobond market. I didn't necessarily think that we could have come out at a lower rate, right? But there was a premium because of the whole rhetoric around Trump. And this is an economy that is doing massively well.
Yeah, and we've even just seen a ratings upgrade from
definitely.
S&P. Okay, so let's move to another story you picked, Michael Burry. And for some of the viewers who may not know who he is, he was a US guy asset manager that bet against the housing market in 2008. Of course, he was right.
Definitely.
Now, he was going to register with SEC, changed his mind, and said that he's on to bigger things. The question in my mind is, if you're changing your mind about registering on SEC, is it that you don't want to disclose something, or are you onto something concerning markets that we may not know about? How do you read this? Because obviously his voice matters in markets.
So it's actually a very complicated story, right? Because like you said, he was right, but he has been right 2 times out of 8, if I'm picking it
Okay.
right. So, yes, he has also shown that he's going to open up his own small family office. And I think he just wants to stay outside the news of press and take positions without everybody zoning down on him. We actually don't know his next move. But one thing interesting is the fact that he made a bet against AI giants, saying the stock market is overvalued. And recently, news just broke out that Warren Buffett has been keeping a cash pile, has just invested in Google. So it's a reflexivity concept, if I can borrow from the words of George Soros, right? But if one thing we know is that the market can stay irrational more than you can stay liquid. And shorting the market has never taken, as in never made huge wealth for a whole lot of people. Small, specific kind of people, right? So regardless of what happened, I feel if you have a diversified enough portfolio, you can take a market hit and recover even massively.
Yeah. Now, coming to Nigeria, at this executive session that Cardoso had, he made a really interesting statement. And the statement was, you know, the economy belongs to us all. Yeah. We can't sort of adopt the silos mentality that you guys sort that out. My question really, who was this message meant for? Was it meant for the private sector? Was it meant for ordinary Nigerians? Was it a way of getting banks to think about lending more aggressively? You know, how do you read these sorts of statements?
Well, see, first, kudos to Dr. Yemi Cardoso, because he has done massively well in terms of giving confidence to Nigeria.
Absolutely.
And we see the numbers, right? I personally think that he's on a trajectory to take Nigerian interest rates to exchange rate to 1,000 to a Naira if he maintains this trajectory. But I definitely see that he might cut rates. If he doesn't cut rates and maintain the confidence, yes, we are going to see, but this is hot money. If he's talking about Nigeria belongs to us, I feel he should start from his own table in terms of improving developmental finance and creating more access to key players that have come into the market.
So when you say improving developmental finance, I mean, it's been very clear from day one that under his administration at the CBN, his leadership at the CBN, that they were returning to monetary policy orthodoxy. So they weren't going to play a pseudo-development financing role for SMEs or the wider economy. So, you know, when you say they should look at themselves first in the area of development funding, what exactly do you mean?
So we need to see ourselves as structuralists. We need to understand our problems and know how to move it. If you move primarily to the monetary system, one thing I can tell you is that the transmission mechanism is lacking because there's a huge amount of informal sector, right?
Yeah, sure.
So let's just say you're talking about something as interest rate. I can tell you that the magnitude that exchange rate has on reducing inflation is more than interest rate. You could see the interest rate on a year-on-year analysis have a positive relationship with inflation. That means as you're increasing interest rate, you can actually see inflation increase based on the year analysis data. But since Nigeria is so heavily import dependent, having an appreciation of our exchange rate is going to actually help the bottom line. So we know that the CBN weighs these options: stabilization of exchange rate, improving inflation. So which one is better? Now, the reason why I talk about developmental financing and opening it up is because we are an emerging economy. We need structures in place. And if we don't have cheaper lending for our farmers, or even have some coverage in terms of people that have invested a whole lot, look at FMDQ, look at FX that has opened up the structure. And we see that FX is having some problems with GTB, over 17 billion or so. The CBN should start looking at being a structural player, because we know that the world is moving from holding dollars to holding commodities. And if we have a commodity exchange that has created the roadmap, created the collateral system, and even educates the SEC on this, why don't we expand this?
Okay, so I think I get it. So your point is not that the CBN itself should be playing the role of a development financier, but should serve as a catalyst for other market players who can play in that space to do so. And of course, the banks can also do so through CBN policies indirectly. But you talked about moving from holding what was it? What was the asset class to holding commodities?
Yes.
And speaking of holding commodities, I want to talk about gold very briefly. We're having a more extensive discussion about it later in the show, but we're seeing a 3% rally this month. We're seeing quite a, gold has been bullish, really, and even the CBN has its own gold reserves. But tell us about how to read this market, gold market, globally.
I think it's a famous economics that said the only currency is gold and every other thing is credit. So when you see gold appreciate almost 50%, it's not because it's yielding dividends or it's doing something dramatic. It's because they're losing confidence in one of the largest currencies, which is the dollar. And if you see who is buying this gold, it is China and other developed worlds that are saying, okay, we might not necessarily trust the dollar or dollar yielding assets. So when you see gold appreciation, it means your dollar assets are actually depreciating. And if you don't hedge that kind of appreciation, you're going to lose wealth. And it trickles down to what we call the Bretton Woods III convention, right? A movement from the natural USD as a fiat currency supporting everything to a more commodity-based currency movement, right? So regardless of your dollar, if it cannot be shaped, if you cannot buy me wheat, if you cannot get lithium, what's the point of using your dollar? And remember, we have found something like $11 trillion worth of lithium mines in Africa, and there is no exploration.
Including Nigeria, actually.
Yeah, so we need more exploration of this commodity market. We need more direct investment, and we need support from government. We see companies like OpenAI projecting to spend 1.7 trillion on AI investment and saying the government will have to step in. We need to step in what makes us great as an emerging country. And I think commodities is going to be the next way to go.
We've almost run out of time, but some very quick word on the NGX. And the question is really around, is it a case of actually where the markets are vetoing policy? Because this seemed to be almost directly related to the capital gains tax.
Definitely.
Yeah. Is this a kind of precedent we want to set?
Okay, so we did an analysis in VNL research, and we understood that, okay, the government took almost 8 trillion in capital company income taxes last year, right? And they were only able to raise around 33 billion in company income tax. But mind you, that is almost 70% increase. But we have seen asset class in the NGX appreciate almost 500%. We have seen mad value creation. And now the cost of that value creation is a 10% tax. And now we see more people pouring into the NGX. And now if more participation, more value creation is created, but they are taking it at a huge risk because this is an emerging market.
Sure. If
you're taxing them almost 200% higher than what you taxed them before, and comparable to other African countries like Kenya and South Africa, Nigeria is one of the highest in the region, even higher than the US, right? So what does the market do? These are HNIs and institutions that cannot protest. So what do? They sell and bank their profit. And because of that, 4 trillion has left the market, almost half of what they made in company income tax. It's showing that the market participants are sending a strong message. I know there has been remarks like, we have heard your complaints, but the market participants will need more legislation, more move to make sure that they are not being flogged for investing in Nigeria.
Fantastic. Great insights as always, Dr. Ifeanyi Ubah. Thanks for sharing your thoughts with us.
Thank you for having me.